Hello friends, welcome to today's affairs. Today we will take a look at and compare the startup ecosystems of India and China. In the last decade or so, China, which many people still call the world's factory, has actually slowly weaned its economy off of manufacturing and diversified into tech, with BATs leading the charge. That's Baidu, Alibaba and Tencent. In 2021, Chinese startups raised a whopping $130.6 billion in venture capital, which is 3 times more than the $42 billion that Indian startups raised during that same year. India, which is the third largest startup ecosystem in the world, raised $42 billion in 2021, which was the best year on record for Indian venture funding, was more than $15 billion and less than what Chinese startups raised all the way back in 2015. Talking about valuations of single startups, India today has 4 decacorns. That's companies that have a valuation of more than $10 billion. And these companies are Flipkart, Byju's, Swiggy and Nykaa. And if we take all 4 of these companies and combine their valuations, they are actually still less valuable than China's single most valuable hectacorn, ByteDance, which is known for its flagship short video sharing app TikTok and is currently valued at a whopping $300 billion US dollars. Talking about investors' trust in the ecosystem, India has a much more open ecosystem when compared to China. Flipkart is owned by Walmart, but ByteDance's ownership isn't clear. Yes, they have raised upwards of $9 billion from investors, local and international, but how much control do those investors actually have over their China-based portfolio companies? It's hard to imagine international stakeholders voting against the desires and agenda of the CCP. Talking about protecting their local businesses, both India and China are pretty ahead on that. India, for example, has banned Chinese companies like TikTok and Shein, thanks to protectionism. Startups like Moj, MX Tagatak, Chingari, and Josh have been able to thrive. China also banned American companies like Facebook, Google, and Dropbox. Other American companies like Tesla, Apple, Starbucks, and Nike have a strong presence in China, but are also very careful to play by the CCP's rules. India, however, is ahead of China when it comes to growth in minting unicorns. The rate of growth among unicorns in India, 36% growth from 2019 to 2020 and over 100% growth in 2021. And if you take a look at China's growth, 8% growth in 2020 and just 14% growth in the year 2021. India is clearly ahead. And according to INC42's The State of Indian Startup Ecosystem report, India will beat China to become number 2 in terms of total unicorns by the year 2025. When we talk about which sectors are dominant in both countries, most valued startups in India come from e-commerce, followed by fintech and SaaS. For China, the leading sectors are finance, internet, and logistics. In terms of where these startups are coming from, in India, most of the companies with a valuation upwards of $1 billion are located in Bengaluru, followed by Delhi, NCR, and Mumbai. On the other hand, startups in China are located along the east coast, such as in Beijing, Shanghai, and Shenzhen. Beijing is known for its booming artificial intelligence, big data, and fintech startups, and about 70% of country's potential unicorns are located here. Standing up to Beijing is Bengaluru, which has a mix of sectors ranging from e-commerce to fintech to agri-tech and EVs. In the last few years, however, focus is shifting from China to India when it comes to growth. Last year, the Chinese Communist Party started a massive crackdown on tech giants, education, and entertainment firms in order to pursue the ideology of common prosperity, which seeks to narrow the stubborn wealth gap between the rich and the poor. These crackdowns by the government have already wiped out 1.5 trillion US dollars in market value last year and have left investors from around the world terrified of losing their multi-million-dollar investments. India, on the other hand, is slowly replacing China as the preferred destination of investment for these Western firms. China Plus One strategy, where world is looking for another place for manufacturing, is also set to help India massively in coming years. India is being viewed as next growth engine for the world's economy, and Indian government is also playing a key role in all of this. Its efforts towards easing regulations, providing good infrastructure, and promoting entrepreneurship across the country through programs like Atmanirbhar Bharat, Gati Shakti, and Startup India are starting to show results.